Hey, my crypto crackheads and cryptillions, this is Tim, and now you're going to get Timified, so let's hop right into things immediately. So yesterday in my video, I got BPro pulled up here on the 4-hour chart, and I mentioned yesterday very specifically that if I were trying to take your money, I would drive price down to the bottom of the range, which I laid out to be around 0.0044, I think I might have said. And what did price do? Went down to 0.00447. So now let's check this out though. If you have a hunch that price is going to go down to the bottom of the range for a very specific reason, and here was my reason. I knew that so this purple line for me, I have it set up as the 89 EMA, exponential moving average. And if you don't have exponential moving averages, go to indicators, put EMA, type in that, and then look for the one that says crown. Okay, crown. There you go. Okay, and you can change the colors here. See where my cursor is? The gear. You pull it up and you change colors and you change the inputs to these. All right. Anyway, I knew that the bottom of the range was here. Because look at this candle, look at that candle, look at that candle, look at that candle, look at my body, right? These candles are sexy. Look at their bodies. So this is resistance, 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 support, support, support. I knew that this was the bottom of the range, but remember in my previous videos when I said when two lines are converging, price likes to get sucked into it? Well, what else is converging on this line? This 4-hour EMA, 89 EMA, and look in previous price history. What does price like to bounce off of? You see that purple line? It's just a bouncy ball. Wa-ding, 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 wa-ding. And then we had a nice run and wa-ding. So this 89 was converging with the bottom of the range. Two important things. The bots will suck price into it. That's just the way it works. However, a second way bots like to make sure you don't make money. And again, if you play by the bots' rules, you will make money, okay? And I'm trying to help you do that because I've been screwed so many times over the past 4 years making perfectly sound financial choices. And the bots see your choices and they navigate around them and they just flip you off, literally. So here is a big flip off. Look, it did not go down to that. Okay, it scared people out. People absolutely panic sold here. I bet that from this part of the candle from here to here is no bots. I bet that's people panic selling. Americans when they woke up in the morning on their phone or whatever. I don't use my phone for trading, but anyway. And people panic sold. And then the bot said, okay, we screwed enough people. We about hit that point, but here's the way that they screw you twice. They didn't hit that amount. So the bots saw a bunch of people's orders down here, probably because in my video yesterday, a lot of people might have made, and so did I, wise choices to put in some limit buy orders for 0.0044 something. Right here, hell, I even had limit orders down here for one because I look at these wicks. Like if you caught price right here on these wicks, that's awesome because the next candle, you know, let's say you had put $1,000 right there, you would have $1,300 in the next 4 hours. So that's why limit buy orders are so important and not just hitting market buy all the time. Market buy, you're going to have to wait so long to get your money back should price not be on an uptrend, right? So in bull markets, it's really good to buy when it's scary looking, okay? As long as it makes sense why. If you have a calculated trading reason why, like I said yesterday, the range is this, that's the bottom of the range. Also, the EMA is coming up, and so how would you know to look at that EMA? Well, just like one of those hologram photos, you know, as you walk past it and see it at different angles, you know, the picture changes. That's what trading is too, and that's what these, see where my cursor is? That's what these are. So it's a hologram. So as you're walking by, it looks different, it looks different, it looks different, it looks different, it looks different. So as you flip to the daily, you can also see that price has previously, so here price was writing the 10. Look at all these 10 spots. It was writing, would dipped below a little bit, writing. So I actually kind of thought that price would not close a candle below this point. But I also thought, since all these times it's wicked below, that it would wick below as well. And so when you flip to the 4-hour chart and you see the hologram from a different view, you can also see that this 4-hour 89 exponential moving average is about at the same spot as the daily 10 exponential moving average. So that's two things telling you the same thing, which makes it even more powerful, because the bots, some bots are programmed to the daily, some bots are programmed to the 2 hours, to the 15 minutes. On KuCoin, on a small cap coin like this, there are probably only bots on the 4-hour, 10-hour, or 10-hour, 4-hour, maybe 12-hour, and daily. So they all have slightly different algorithms to try to screw you at, in different ways. Like, so they have their own screw you hologram, right? So you have to look at the screw you hologram in different ways, and that's what these different time frames are. So that is why I straddled orders here. And so to avoid the screw you in the second way, so they saw your orders down here if you had done it, and it said, I'm scaring people. Ooh, there's orders down here. Screw them. I'm going back up. That's exactly what happened. That's literally what just happened. And here's how you take their flip off and then flip it off, right? Let's flip off a flip off. This is how you do it. Check this out, peoples. I thought I had it pulled up. Oh, here we go. So this is not financial advice. I'm just a random dude on the internet who was coloring on a paint worksheet. So let's take a look here. Let's ignore the top part. So this is stratified or straddled orders, right? So look at these colors, okay? So how you can start to understand this is that, let's imagine that 4-hour 89 EMA, the purple line, is the green section. The green means your target. So look up here where my cursor is moving. That is your target. You think price is going to hit that. It might stop up just above it. It might go just below it, but you think price is going to bounce off of that. And you have different reasons why, because you looked at a hologram on different time frames, the 4-hour, the daily. You have good reason to think that. So this was your green, 0.00434. You think that is your your price target. So even though up here I was looking at the 2-hour. Yes. So here I was looking at the 2-hour because I thought the dip, I didn't think it was going to go this. I only thought I had a 30% probability to do this. However, because I didn't think the bots would give us such a great buy opportunity. But anyway, earlier, like 2 or 3 days ago, this was my target, because look how perfectly it hit the 89 EMA, and I thought the bots were really playing the 2-hour, and they kind of were, because this is the 200 exponential moving average. So again, hologram, looking at it a different way. This is the 2-hour. Look up here where my cursor is. Okay, so I thought, okay, well, I saw price kind of getting some momentum, and look at this red line crossing below the 21. When this happens, the bot's algorithms typically say sell, and then since it respected this so well earlier, I thought, well, the bot's algorithms are going to say buy down here. So I just said, all right, I'm putting buy orders here. So look at this, 0.004. So look right, see over here where the price is to the right. Okay, so the price is moving up, the price is moving down on the very right hand side. So look at the price right there. Right there, 0.00534. Okay, 0.00534. So I was trying to catch that, and actually I did. And I put my target price as 00534, right? So that's the green, all these green ones. And then I put some limit buy orders above, and below. So my strategy here, so now you have to look at the amounts. So This is roughly an equal distribution. So what my straddling was is this one, where I'm circling right here. I was, well, you can't see that at all. My strategy was this guy here. Okay, so sometimes when you're not so confident about your, if you want to play things really safe, like for example, if you're leverage trading, something like this and this are really good choices. So this would be something like if you're longing and you want to catch a dip, because this kind of helps save you if price goes way below, like, you know, a good 5% below or 3% below your target, but you didn't put a lot of leverage at your target or above. So most of it is below, so you can really catch wicks that go down below. And what that does is it helps you not get scared out of your position if you're using leverage. So this guy here and this guy here are good for leverage trading, right? But if you're just trying to, you know, trick KuCoin bots, which are pretty stupid, these two middle guys are probably good ways to go. Something like that, but I chose to do something like this. So technically, since this was a smaller order, all right, this purple is actually technically only this big, right? So that is how you envision my straddling strategy as of a couple days ago when I caught that dip. To catch this dip here, again, I was playing the 4 hour, and I actually sent to my crypto group, hey, I even let them know when price was about at 0.0055, and when it was riding this line. I didn't know if it was going to stay above, because especially after this candle here, this is called like gosh, what is it called? It's not a hammer. Hammer's the idea. So I can't remember what it's called. This has a special name. And so look at this candle here. What this candle means is, see the body, how it's so thin, but the wick is above? So that means price started out low. It went all the way up, and it came back down and closed here where the top of that green body is. And this signifies a lot of sell pressure. So right here I sent to my group, hey guys, I think the play is the 4 hour 89 EMA. And let me, that's my work stuff, sorry. I will actually just pull that up so you can see. Give me just a quick second here. Alright, so look, see this here? So I just copied, or I did a screenshot, a selected screenshot. And the way you can do that is Windows button Shift S. You can select any portion of your screen. It's pretty handy than doing print screen. So I let them know the play might be the 4 hour 89 EMA purple line at 0.00437. Okay, so I let them know, hey guys, you know, and so what did price go down to? 0.00447. So I was off by 1/10,000th. So that was a pretty dang good call. And if you stratified your orders, you know, pick one of those. Since you can't leverage BEPRO yet. I mean, once it crosses 2 billion market cap, perhaps not this run. I don't know if it'll get that big this run, which would put it well over $1. That would be like $1.10, I think, because I think the circulating supply is 1.8 billion. So if it had a circulating supply of 2 billion, then price would be just over $1. But anyway, if you did a straddle order and only, let's say only this many got hit, these two, and you are confident that you were correct that your target was the spot where price would not go below because you see price bouncing off. Once price is rising, that would be, and this is not financial advice, that would be a good time for me to hit market buy, because you typically only want to market buy when momentum is up or you think you're on the verge of a breakout. So when a lot of people were buying up here and stuff after this long run, doing market buys and stuff, You know, that's not safe to market buy up here, people, because you're buying a green candle. You're buying a lot of this. Like the momentum has already been started. So the area you want to, like areas that you would want to market buy is, see all this resistance here. If you see price with all these green arrows, and once it passes all of that resistance right there, see where the horizontal line moving up is? Once it passes those candle bodies, market buying right there, that's the type of area where you want to market buy. If you're going to market buy stuff, because momentum is up and it just passed all this darn resistance. So look at this wick here, like that's resistance, and that wick lines up with all these candle bodies. See the horizontal line? Look. So right there, when price is up, that is your market buy moment. Another market buy moment is, see this resistance, resistance, resistance? Well, when this next candle started, it went down first. But when you see it go up to about there, that's another good market buy area. So, or sometimes when you market buy and you just, you wake up and you haven't put in orders and you see it dip down to like, a target area, market buying right there would be an okay idea as well. So, so BPRO did come down and hit its lower side of the range, and it's fantastic buying opportunities, people. So I can't stress this enough. In a bull market, so this rule does not apply during a bear market. You buying dips in a bear market, it can just dip lower. I mean, honestly, when people thought $7,000 in 2018 for after $20,000, if a lot of people bought at $7,000 thinking they were buying the dip, and then it went up to $8,000, and they're like, all right, I made a good choice, and then it tanked down to $6,000. So in bear market this doesn't apply, but in a bull market, which this is a very strong bull market right now, when especially altcoins are popping ridiculous amounts, you're going to be seeing 10x in the matter of 10 days once it breaks a resistance like here. But or sometimes 5x in the matter of days. But anyway, and you can't get that with Cardano, you can't get that with Bitcoin. Well, actually, you could get that with Cardano up until this point, but it just hit its previous high, and it's going to come back down. And Cardano's not going to scream up the rest of the year like it just did. It was only screaming up to its prior high. But anyway, so the general rule in a bull market only is buying when it's scary is better than buying when it's glory. So buying green, buying glory is setting you up for buying here, and then, oh no, I lost 20% of my money. Actually, let's see how, I bet it's bigger than 20%. So you bought about here. Look, your $100 became $66. That's scary, and that's why people market sell, because, I don't want to lose any more of my money. And so buying when it's scary in a bull market allows you to catch the opposite way. If you put $100 here, in just 8 hours, you now have $200 exactly in 2 hours. Or no, in 8 hours. So these are 4-hour candle bodies. So 4 hours, 8 hours. In 8 hours, you doubled your money. So buying glory in a bull market, not so good of a decision unless it's a breakout. So remember these breakouts I showed you earlier. So this wick and all these candle bodies, buying glory here is good. Resistance, resistance, resistance. So, and then this candle went down. Once you saw it go up, buying glory right there is probably okay. And then, so buying glory, buying breakouts is good, and then buying dips when it's scary is good with a, you can either market buy down here, or just when you think it's going to go down, and you think you have a good reason to know that it's going to come back down and check this resistance and support, which it did, and you straddled your orders. See the horizontal white line moving up and down? So if you straddled orders, kind of like that PDF or the paint document thing with all the colors, if you straddled orders, you hit them perfectly here. You hit them perfectly. All your bottom orders got filled, your top orders got filled, and it's just glory. You doubled your money, literally. You doubled your money in 8 hours. So, so none of this is financial advice. This is just a random guy on the internet talking to himself and recording it and allowing other people to, take information at their own will with a spoonful of salt. But, check this out, guys. I called this perfectly yesterday. So, and so if you did, I had some people comment, hey, I bought at 006. I mean, hopefully you watched my video, you know, so you didn't get scared out here, because the chance of this going straight up and not coming back down is pretty high. And again, in my previous video, I said this is probably not going to break out till March 6th at the earliest. And I would actually guess between March 6th and March 8th. And the reason why is because this triangle, and I also said in a previous video that I don't like pattern trading, because oftentimes you have to redraw your pattern. So remember I said, I even did this, I said the likelihood of having to redraw something like this is pretty high. Well, guess what just happened? We have to redraw it now. Like, this is exactly what happened. And so look at the very thin blue line, okay, going up. Look at this. It almost came down and checked that as well. And so that thin blue line is all of the prior resistance. So the chance of these blue lines and the dark green is connecting the previous high to the current high. So the chance of price for the rest of the whole year, guys. So you might want to take a look at this and draw your lines if you like BPro. And I would use TradingView, not 𝐾𝐤𝐿coin, because 𝐾𝐤𝐿coin its graphs are all weird. Even though they're I kind of like them, but the lines don't stay right. But anyway, if you want to draw these lines and play off them the entire rest of the year, you're probably going to be able to make sound choices, because BPro is probably not going to ever go. The chance of it ever going below this point here is very low. Chance of it going below this point is pretty low too, but it's even lower to come down here. This is like, so if you ever see price for the rest of this year go in this area, like between these two lines, that is a hell of a time. That could be a hell of a time to buy. And unless it's getting close to Thanksgiving to December, that's when price really can tank like 50% quickly. So, you know, getting flat into stable coins, and this is not financial advice, I'm just repeating something I heard on somebody else's channel. His name is Richard Hart. His IQ is probably over 150. I mean, that is, like, his level of intelligence is literally in the top 0.2% of the population. The dude is a genius, and he's a billionaire because he got into Bitcoin when it was like 10 cents, and under 10 cents even. He was mining it before it was 10 cents. He was mining on his computer. He moved countries. I think he might live in Cyprus, or no, he might live in Cayman Islands. But he had to move countries because he didn't want to pay Uncle Sam billions of dollars. So he moved so he could keep all of his money in a tax haven with zero tax. And now he's even richer because he created Hex, and Hex has been doing really well. And Hex, you might want to check out Richard Hart and his project Hex. If you want to hedge your bets later this year, when you think things might tank and you want to get flat, hedging bets like maybe 60% of your earnings into stablecoins and 40% locking it up into Hex. You know, you might want to wait till Hex takes a dip before you lock it up in there, but locking it up for 2 years, it is a CD, so, you know, a financial growth platform, right? Just like banks offer CDs. Alex, be quiet. And you know, so that you don't get wrecked during a bear market, if you just hide your money and you don't allow yourself to touch it as things go down until you think it's bottomed, and it could take 2 or 3 years, people, just like this last time. You know, your money's growing during that whole time, and you're not allowing yourself to click around and lose all your money. During a bear market, which is what bear markets do. So you might want to check that stuff out. So this is my fellow BPro train. Guys, so now that we redrew this triangle here, it might take longer than March 8th. And that's why I don't like pattern trading. However, triangles do work, but whenever you draw a diagonal, just realize that maybe your guess for the range was a little off. And sometimes if you want to guess, you just come down to whatever has the most, which candles, on something like Bitcoin and Litecoin, you want to use the weekly to check out resistance support, but BPro's price action has recently skyrocketed, so you can't use weekly because there's only one candle here or two, right? But anyway, if you want to guess, hey, if it does dip below my current diagonal, which was here, you would want to guess that price, in a little bit might come down to here, and you might want to draw a second potential triangle, just below it, like have two lines, diagonal lines as possibilities. So now that we dip below and created a new triangle, this could go like this, that, and this could go till the middle of March. So BPRO might be boring until the middle of March. But guys, listen, if you are trying to, and gals, so gender neutral, my crypto crackheads and cryptillians. There we go. I need to stop saying guys, those girls aren't guys, typically. Now I'm getting into, just imagine I didn't say that. Cryptillians and crypto crackheads. Gender stuff gets a little sensitive, so I'm sorry. I will stay gender neutral for the rest of eternity. So anyway, if you are trying to, in the stock market, if you think being boring until the middle of March in BPRO is a long time, it's not. It's not. Gold has stayed under its all-time high since like 2012 or something like that. 8 years. It's screamed up to 1,800 or almost 2,000 and hit its all-time high. Now it's going back down. It might stay under 2,000 for the next decade. All right. And gold has a really old market, but a week and a half is not a long time. So, and it just gives you a lot of buying opportunities. And if you want to take, if somebody, and this is actually what I'm doing, so I'm taking 10% of my BPRO holdings, and while 90% of it is just going up and down, I use 10% to buy at the bottom of the range, sell at the top of the range. And I'm not market selling, so I'm not crashing the price. I'm actually limit selling up here to try to make liquidity, so if somebody does hit market buy, it's not just all bot orders, and it allows price to come through here. I try to create liquidity, and I straddle the orders. So if you want to take like 10% of your earnings and buy the bottom of the range, put limit sells straddled here. Buy the bottom of the range, put limit, and you'll see that 10% grow into like 40% of your holdings. All right. Do you want to do that with over half? No, because then when you make a mistake, you might, if you think this is the bottom of the range and it comes here and you get scared out, well, then you're just reducing your amount. So, if you want to play with 10% of what you have, buying the bottom, selling the top, buying the bottom, that's what I'm doing. This is not financial advice. I'm just talking to myself while recording. So now, how do I think this will break out? There are three ways things break out. It'll come back to the top of the range. It might, and come down. Come up one more time, come down, come up, and break, just bust right through without hesitation. Because if the bots see an opportunity to make sure you can't make money, they will, and they'll bust right out. So that's one way. A more common way is that it comes up, comes down, comes up, fails to come out, tries it again, fails, and then bust through on the third time. Or the third way, something to watch out for, and especially to not get scared out of your money, is it comes up, it doesn't come back down all the way, halfway, and then it busts through like high, like way above it, and then it crashes back down and comes all the way to the bottom of the range. That happens a lot, people, because the bots know that there's a triangle here. It's forming the dang triangle, and the reason triangles are so common is because the moving averages are diagonals, right? See all these diagonals? They're diagonals, so triangles happen because of the moving averages. So so the bots aren't actually taking, geometry and hypotenuse and all that kind of stuff and math there, but they're forming the triangles because they're playing the moving averages. And so that's one thing to look out for. Price could come up all the way to 2 cents and crash back down. So let's say it goes like this. The price could go all the way up to 2.7 cents and come crashing back down to 0.008. It could. However, I don't think KuCoin's bots are that on a small cap coin. They're not putting to work their A+ bots here. All right, so that's probably not going to happen, but it could. So just heads up, people. Like they'll get you to buy a breakout, and then they'll get you excited and they'll crash and they'll make you panic sell down here, so that you bought here, you sold here, you lost money, they took your money because the bots are buying it back here. They're taking your money. All right, so that's 3 ways. So just recap of how this might play out. The most likely situations: goes up, down, up, down, breaks through, or it could go up, halfway down, boom, or it could go up, down, screams past, comes crashing back down, fills out the rest, then goes up. Or if it decides to break up, it might come back down and just make the triangle bigger, you know. It could come down even lower. Or you know, it probably won't reach all. It might just dip below the triangle on a wick to scare people. After it comes flying up, it might come back down, wick below, and then fill out the rest, and boom. So that's how you play triangles, people. Triangles work because moving averages create them. The price pinging off of the rising moving averages is what creates triangles and all across crypto. And you know, that's the. So hopefully, you know, if you're trading BPRO and you you like the project, because I mean, guys, it really could be essentially the Ethereum of gaming, because Ethereum's setup is not necessarily made specific to gaming platforms. So you know, and if you're not for sure what Ethereum is, it does take a long time to understand what it is, it's a big learning curve to understand. I mean, hell, it's a big learning curve just to understand what Bitcoin is and what distributed ownership, how that creates a trustless system, and why that's so valuable for the world. But anyway, Ethereum is essentially Microsoft Windows. So when people buy computers across the world, what does it have on it already? Microsoft Windows. So Ethereum, if instead of buying a computer, you want to create your own cryptocurrency, like build a company that uses distributed ledger technology, you know, for supply chain purposes, or actually Tone, TE Food is a supply chain purpose. It's essentially tracking food and how fresh it is, where it was made, so you can scan something, and if you're eating a pork chop, you can see where that pork chop was made. I mean, you can literally see it, the exact location, the date the pig was killed, everything. And they built their company outside on Ethereum as Windows, as Microsoft Windows, right? And that's actually what created the bubble of 2017. It was definitely Ethereum that did that, because everybody just hopped on Ethereum and they used it to quickly build a coin. It had no finished product. They just made a website with a white paper and a yellow paper and a bunch of promises that we're gonna change the healthcare industry. And then everybody said, oh, this is gonna be huge, even though it was like 3 people who know how to create a program using Ethereum, and they haven't talked to a single healthcare provider. Like they don't, or whatever their plan is. They haven't done any of it. They just wrote it down and are making promises. And people skyrocketed that crap to like 5 billion market cap, you know, as big as Subaru Motor Company, when it just had a website. That was 2017, and it was exactly the same thing as the dot-com bubble. That's exactly what happened in the dot-com bubble. Instead of Ethereum, it was the internet. Web pages were new, and humans didn't really understand at that point what the internet was. So they just kind of, you know, logged on using Netscape, which was pretty much the only way, and listened to the dying, the phone noise. And when they saw pets.com or whatever, it was just a website. They didn't have any revenue. Nothing. Like Cardano has no revenue, but it's worth more than Ford Motor Company, which is really scary, people. It's very, very scary. It's honestly, it's very bad. A company should not be that. It doesn't matter how good your technology. You know, if Tesla spent 4.5 years making promises and telling people how cool their car was going to be for 4.5 years without ever making one or selling one, its market cap would not be in the billions at all, right? You shouldn't buy a company stock who's making promises for 4.5 years, and that's what Cardano is. So just, if you are like Cardano, you know, it is a great project, but that doesn't mean it's not overvalued, all right? So at some point, you have to start forgetting about about how cool it is and realize, wait, this money doesn't make sense. So at some point, the money it trumps everything jargon, technical, how advanced it is, it doesn't matter. At some point you have to realize, wait, the numbers don't make sense, and it is like 100 times past that point. It's insane. So anyway, that's what Ethereum did. It allowed companies to make stuff just like the dot-com bubble. It was the dot-com bubble for blockchain. That's what it was, and it was all because of Ethereum. So what 𝐵Pro is, that was a long tangent, sorry. What 𝐵Pro is that it is essentially like Ubuntu or Linux, right? But it's particular and very specific to gaming platforms. So, you know, if you check out Ethereum, did it start on Coinbase? Let me see if I can get some price history. Yeah, look at this, people. Ethereum started out at like 10 bucks. Look at that. I mean, it did a lot of sideways movement. I mean, look how long this was. Almost a year. 3/4 of a year. 270 days. All right? So if you think waiting for 𝐵Pro to, you know, have a breakout for 10 days is long, look at this. Look at that. Look how much patience people had to have to ride the ETH train. Okay? And so ETH, just so you know the power of small caps, ETH will never see in 1 year a 12,000% rise ever again. It won't ever happen. And so I've mapped out old coins and how they rise, like 𝐲𝐼𝐢𝐾oin, 𝐾𝐢𝐬𝐜, Bitcoin. Typically, in a super bullish year, it will only rise from its bottom, its new bottom, 1/3 of that percentage. What did I say? Did I say 12? So if you want to get an idea of where ETH will go, it'll hit like 4,500%. 4,900. No, I'm probably wrong there, guys. I think I'm way more bullish on ETH than that. So this is a type of moment in trading where the numbers, you know, you have a system and you trust it. So if I had to trust my system, I would say ETH at 4,000 bucks, because I've mapped this out. I know what runs do, but so that's what my brain says. My gut says, I think this can hit $15,000, and super bullish 20,000. I really think it can, guys. And this is not financial advice. And so 20,000. Oh wait, that's 100,000. Sorry. 20,000 would put it the same, almost exactly the same percentage run as it did last time. I guess that's possible. It's just a tiny bit bigger than the last run on a percentage basis. But anyway, when you're trading, so this is a perfect example of how you lose money. You have a math system, okay? You know it works, but then, so that's your brain. But then your gut says, this can go to 20,000. And then you override your brain system, your math, and your system, and then you lose your money. So what I'm doing, that's a good way to lose your money. But that's a very macro thing. So you can't lose money just like making guesses, but that exact conflict between your system and your brain and your gut, your heart, where it tells you when you're making active choices trading, that's how you lose money. You have to become a robot and just say, well, even if my system's wrong, I don't care, I'm following my system. And maybe you miss out. Maybe you miss out on some profit because you followed a system and your gut was mostly right. It doesn't matter. If you keep following your gut and not a system, you will lose all your money. And the way you'll lose your money, especially in leverage trading, which I don't suggest, if you're just buying 𝐵Pro on zero leverage, because you can't use leverage, and it goes down 30% and it's a bull market, you know, you could just wait that out and go. Your money's not going to zero like it could in leverage like that. But anyway, a good way to lose all your money is by going with your gut and overriding your brain. And what happens is when your gut has a feeling and you see your system, you know, it wasn't perfect and you missed out on maybe $100 of profit or $1,000 of profit, then your gut says, okay, my gut was right, I'm going to jump back in. And that's the moment that the price just goes right back to your system and you get screwed. That's exactly how it happens. Or the way it happened with me, like 5 times in a row when I started out with $150 trading Bitcoin on leverage, around when it was about $6,000-$7,000, when it's coming up out of its second dip down to 5, I think in 2019 or 2019, after that $14,000 run. So I got back in. Actually, it's possible that I got some money out of my 401k and bought Bitcoin at $5,000, which was a fantastic opportunity. It was a great financial decision. But anyway, I played with so I didn't leverage all that, but I took $150 of it and I got on a great roll, and I turned that $150 literally in 20 days to $3,500. Like, I was playing with 0.3 Bitcoin, 0.4 Bitcoin at the time, and God, if I just would have stopped right at that point and just held it, like, I would be in a good spot right now, because I did it 5 times. So I turned like $150 into like over 3. So one time it was only up to $2,800 before I lost everything. But anyway, you get on a roll, and when you get on a roll, you start making more gut choices. All right, because I'm confident, I'm hot shit, I'm on a roll, and you stop using your system, and then you get crushed and you lose it all. And the way you lose it all is when you're on a roll and your gut makes one bad choice and you lose 10%. What you do is you're still confident. So what you do after taking a loss, you make a choice on top of that that's even more aggressive, that makes you lose even more, and then you lose even more, and then you still think you're confident, and you just lost 60% of your money, and you're like, I'm gonna get that back now, right? And then your patience drops, and then now you're scrambling. Holy shit, I just lost half of what I just earned. I worked hard to earn over the last month. Then you make an even more aggressive decision. I'm gonna get that back quickly, and then you lose it all. In that order, that's how it happens. Like, so we're a B Pro train. That's a gut train. Not following the head, and so if you ever try leverage trading, which I do not suggest it to anybody, especially in a bull market, or especially ever, unless you're a trader. But anyway, that's how you lose all your money. And I've done it 5 times, and I've grown from it. So if you talk to a lot of traders, they almost always lose their full account like 3 and 4 times in 5. It's completely normal. And so what that does is it allows you to realize, wait, I can't trust my gut. I have to trust my system. So take my failures and learn from that, so you don't have to. You have to have a system and never trust your gut. Just literally follow your system and close your eyes and walk away and just let it go, with your stop orders, so that if it is the wrong, your system was the wrong direction, that you limit, only losing 3% of your money because you stop yourself out. You put stop orders. Anyway, so that's what I got for today, folks. Stay safe out in crypto, and my crackheads and cryptillions, we'll see you next time.